Hi, I'm Jesse Torres.
And I'm Aaron Michael Sanchez.
And this is Two Men in Your Business.
On this episode, we talk about
how to keep your cash flow strong.
This episode of Two Men in Your Business is brought to you by
Merchants Bank of California.
Jesse, you've been the CEO of a bank. You understand better than anybody that you need to keep cash flow strong.
Absolutely. So it's no lie, cash is king.
Yes.
I mean, there's nothing more important to a small business, and you know it, than your cash. You need to have cash in the bank to make sure that you can meet the obligations that you have on a daily basis.
Okay, so we have 5 steps, and here they are. Number 1.
Right. So the first and most important thing is to create a budget. You need to know exactly what's coming in and what's going out, and you need to know exactly when it's going to be coming in and out. So what that means is you need to sit down, you need to look at your business and create a thoughtful plan that shows when the money's coming in, but really more importantly, when is it due out? Because if you have expenses that are due, payroll, taxes, right, supplies, and you don't have the money in the bank to pay for those things, you're going to run into a lot of trouble.
So look ahead of the game, expect ahead of the game, and see your slump. Sometimes it may be seasonal, right? There are organizations like air conditioning companies or home improvement that look at seasons. They know when they're going to dip down, so they need to prepare ahead of time.
That's right, that's right. And so the second thing you need to do then is you need to monitor those results. So you go out and you create a plan. You say, this is when I expect my money to come in, this is when I expect my money to go out. But are you monitoring it? Is the actual money flowing according to your budget, to your plan? And if it's not, you need to figure out why.
Now, there are different programs that can help you monitor. We always hear QuickBooks.
Right.
There's a new app actually on the playing field.
That's right. It's Xero, X-E-R-O, and you want to check them out.
Yeah, check them out. They actually are a cloud-based service, so you can have an unlimited amount of people working on it, adding information in there, seeing real-time analytics, and you can invoice people right away.
That's right. So it's a great tool. So Xero, we'd say check it out, give it a look, see if it fits your needs. The third important thing is you need to have a plan B. So you have a budget, you say, okay, this is when I expect my money to come in, this is when I expect it to go out, but every now and then something happens. It might be a catastrophe, it might be something that you just didn't expect. You need to have a plan B. So let's say you're operating in business and you're doing great, and this great opportunity comes along to maybe buy a competitor, to maybe buy inventory at a deep discount, but you don't have the cash set up. What can you do? Do you have a plan B to account for it? And so plan B means, do you have a line of credit set up that you can tap? Do you have friends and family that can help you? Sometimes a plan B is necessary because things go sideways. Maybe you're a pizza joint and your oven breaks down. Do you have a way to buy another oven? So you need to make sure that you have a plan B just in case of an emergency.
And this is important too for products. You can crowdfund as a plan C.
That's right.
Put in a crowdfunding if you have a product, you can pre-sale product and throw it out there. Again, this is if you've already built an audience and you have a fan base. Do that and you'll be able to have a plan B and a plan C.
That's right, because crowdfunding, crowdsourcing is a great way to raise money. Okay, what's the fourth thing, Aaron?
Bill quickly. Get it out there. Get your invoice out.
That's right. So you need to be able to, once you make a sale, and this really applies if you're making sales on credit. So for example, most retailers, they buy something and you take cash at that moment.
Right.
But if you're in the business to business segment, a lot of times your business customers are going to expect some credit. Maybe it's 30 days credit, maybe it's 45, maybe it's 60. What you want to do is if you are providing sales on credit, the moment that deal is done, you go to your system, whether it's manual or whether it's automated, and you send an invoice to them so that they have it, so that their accounts payable folks have that bill in their system right away.
How many businesses, small businesses, are using PayPal? PayPal actually gives you the ability to offer credit as well for that if, they could give you a 30-day, and you can set that up with PayPal. But going back to invoicing, there are many online invoicing, much like the company we mentioned earlier, that gets it out to them because now people can pay online through their apps, through their phones. There's no reason people shouldn't be paying you.
That's right, and you want to get that bill that invoice in their hands as soon as possible because some businesses may have long payment cycles. The bigger the company, the harder it is to get a payment from them timely. So the sooner they have your invoice, the sooner you're going to get paid.
That takes us to step number 5, set timely payment policies. Well, first of all, we got to talk about why would you not be timely?
Well, and that's a great point. So in the business world, a lot of times what you say is you want to collect fast, but you want to stretch out your payables, right? You want to collect fast and stretch out your payables. So if you are on the other end, let's say you're the customer, okay, and you're given 45 days to pay that bill. Pay that bill in 45 days. If you're cash strapped in particular, you may not want to pay it any sooner, but make sure you pay it at the 45th day, because you might then be imposed with some penalties. Now, on the flip side, let's say you've got the cash.
Right.
Let's say you've made a purchase. Well, why not, when you're making that purchase, negotiate for a discount? Why not say, hey, well, I'm going to spend $100,000 on this new equipment, but I've got $100,000 in cash. How about if you discount me 10, 15%, and I will give you that cash today, because recognizing that that business also needs that cash.
That is a great point. I did a lot of sales, and we did sales for air conditioning and home improvement products, so sometimes I talk a lot about that, but we always had that one customer that would say, what if I paid you cash versus credit? Well, that saves us as a business, because we don't have to be charged that 3% or however many percent that American Express, which charges about, I think, 6%, or Visa, which is charges at 3%. Yeah, we will go ahead and discount that, and we know we have our money now.
That's right. That's right. So there are great advantages, great negotiating possibilities for you. If you got the cash, take advantage of it. Use it as a tool. That's right, to get some of the discounts. Yeah, 5 tips for you. What are the 5?
Create a budget.
That's right. Number 2,
monitor the results.
3,
have a plan B and even a plan C.
That's right. 4,
bill quickly.
And the 5th one I will give you, which is set a timely payment policy.
I'm Aaron Michael Sanchez.
And I'm Jesse Torres.
We are Two Men in Your Business. We want to hear what you have to say. Comment below, and don't forget to subscribe to our channel.
And tell us if you like us, and if you don't like us, let us know as well.
Please like us. We need more likes. Two Men in Your Business would like to thank Merchants Bank of California,
an FDIC insured institution. If you're an entrepreneur looking for a small business loan, be sure to reach out to them at merchantsbankca.com.